Hello, everybody. Ignatius L. Jackson, CPA, PFS here. Are you a college athlete? Do you throw some football? Do you shoot some hoops? Maybe you are a pitcher, baseball player. If you're getting paid for your name, image, and likeness, what do you need to be worried about from a tax and financial standpoint? Today's video is going to talk through that, and so you should pay attention and listen in. We're going to be right back in a second. Don't pull away. All right, everybody, and we're back. Okay, so again, my name is Ignatius L. Jackson, CPA, PFS. What that basically means is if you haven't seen any of my stuff before, you're watching this for the first time, you're a college athlete. I'm obviously Arizona State Sun Devil, as you can tell from my shirt and my hat here. I'm alumni of Arizona State, season ticket holder, house supporter, all that great stuff. Okay, but I love college sports, love college football particularly. I just really enjoy going to games and watching it. But as we get this name, image, and likeness is taking the country by storm. Okay, we have athletes getting hundreds of thousands of dollars, some of them getting millions of dollars in these contracts, and they don't know what to do with the money, and they don't understand the tax implications. And so I'm just going to touch on this briefly for you. But the main point I want you to understand and know is you need to have an advisor, whether it's a tax advisor or a financial advisor, that understands these tax implications and these financial implications, that you can talk through this stuff with and make sure you are saving for your future and not spending all your money. Okay, because you never know what's going to happen. There's been a lot of injuries in college sports that have been career-ending injuries. Okay, it happens. You never know what's going to happen. And so you always have to save for your future, because the last thing I want to see you guys do is end up broke after you've had this opportunity to make some good money that most people will never have the opportunity to do in their entire lifetimes. Okay. So don't waste it. Take advantage of it. Make sure you're doing the right thing. Okay. So first, let's talk about the financial aspect. You should always set aside at least 10 to 20% of your gross earnings into some investment vehicle, whether that's a Roth IRA, a traditional IRA, a 401k, taxable brokerage account, Bitcoin, crypto, whatever you want to put it into. Okay. I would recommend something a little bit safer than just some random business idea or some random crypto coin that's out there. But, whatever you want to put it into, at least put 10, 20% of your gross earnings into that each year and invest it. Okay. That's an investment. We want you to put things into an investment that have an opportunity to grow your wealth and earn you more money over time instead of you just spending money all the time. Okay. I know a lot of us that are in this NIL space, a lot of you in the NIL space are coming from backgrounds where you never had anywhere near this kind of money. Okay. Which is why I want to do this video, because I want to encourage you to turn the statistics on their head. Okay. Because we know that statistically, the majority, overwhelming majority, all right, really is probably more of a super majority of college athletes and professional athletes, by the time they get done playing ball, right, they end up broke within a few years of leaving the league. That's a horrible stat, especially when a lot of you, are coming from backgrounds where you didn't have much before. So you get back into that same situation where you still don't have much, and now you have to go find some other job or something to make ends meet. Okay. When really, if you had done the right thing and put 10 to 20% away into investment vehicles and let it grow, you would have more than enough money to be able to live the rest of your life and not have to work another day in your life if you wanted to. All right. As long as you spend wisely. Okay. So from a financial standpoint, that's one of the biggest things I could say is 10 to 20%, put it away, invest it. If you're not sure what to invest it in, that's safe and reasonable for you, you can always talk to a financial planner or financial advisor. The one recommendation I have, do not use a broker dealer. Broker dealers are probably going to come at me on this. I don't care. Use a fiduciary. Make sure whoever you're using for financial advice is a fiduciary. That means they put your interest first and not their interest first. Okay. No, you should never use someone's advice who is putting their interest first. They should always be putting your interest first as the client. Okay. If they're not doing that, fire them, get rid of them. Don't hire them if you haven't hired them yet. Find someone who's a fiduciary. Okay. So one of the things for myself, right? I'm a personal financial specialist. I'm also a certified public accountant. When you do those things, right? When I'm a CPA and a PFS, I have to be a fiduciary for my clients, meaning I put your interest first, not my own interests, always. Okay. So I'm not going to recommend anything that's not going to be beneficial to you overall. There's obviously always risk involved with everything. I can never guarantee anything, any investment returns, anything like that. No one can, right? But I'm also not going to sell you a bunch of products and insurance products and stock products and all this other stuff that has high exorbitant fees and stuff that is not really in your best interest. Okay. Just because I want to get a big commission coming to me every year. All right. Anyways, that's the financial aspect that I want to touch on. Okay. I'm not going to get too much deeper into that today. Let's talk about some tax stuff because as we approach the end of the year, it is very important that if you have not paid any estimated tax payments on the NIL that you've received, you need to do that by January 15th. Otherwise, you get hit with some pretty stiff penalties. And at the very, very least, you need to pay your taxes by April 15th. Otherwise, the penalties get even higher as of April 15th. Okay. Here's how this works. When you receive name, image, and likeness money, it is as a contractor. You have a company, typically a company, sometimes it's a charity, but usually it's a company, right? That is paying you as a 1099 contractor to do marketing or advertising or something for their business. Okay. Well, when you receive that 1099 NEC at the end of the year, it's called 1099 non-employee compensation. Okay. That contract that paperwork that you receive tells the IRS, the guys with all the money and all that kind of stuff, they want all your money, right? IRS, it's a dirty name, I know, but you got to deal with them. All right. Tells the IRS that you receive money as a business and you should have a Schedule C on your tax return. Or if you were smart and strategized, you may have created yourself an S corporation and you should have that income showing up on your S corporation tax return. Okay. But if you haven't been able to put any of those strategies in place yet, now's a good time to talk to someone that understands all these strategies and can help you structure yourself in a way that hopefully going forward, you don't get killed on taxes. Now let's talk about tax implications. As a 1099, when you're a sole proprietorship, which means you report your income on a Schedule C, okay, Schedule C, you have to pay self-employment tax. Self-employment tax is 15.3% of your net profit from that business, okay? Now, important to note, that's net profit. That means the money you earn, let's say you get $100,000. Let's say you have expenses for that $100,000 of $50,000, okay? So your net profit is actually only $50,000 because you had deductible expenses that you put into that business, which brought your income from here down to here, cut it in half, okay? You paid 15.3% on that $50,000 roughly. There's a little bit more math in there. I'm not going to get into the weeds, but so all you CPAs and people out there, don't be at me like, oh, it's not exactly 15.3%. No crap, I know. But simplicity purposes, 15.3%, right, of that $50,000 you're going to pay in payroll taxes. Then on top of that, you have to pay income taxes on top of that. So whether you're single or married, most of you guys are going to be single at that age. So if you're single, you get to those higher brackets fairly quickly. And so you'll have to pay income tax on that $50,000. So when it's all said and done, you likely could be paying about 25 to 35% in taxes when you combine payroll taxes, federal income taxes, and state income taxes. When you combine all that together on $50,000, you might be somewhere in that 25 to 35% range. Okay. That's a lot of money. Now, if you had spent all that money and you didn't save any or put any away for taxes, now you're going to be screwed. Okay. Because the IRS is still going to want their money. You're still going to have to give it to them at some point. Right. And now you have to figure out how to pay them from maybe future money that you earn. Or if you have one of those career ending injuries in the meantime, maybe you have no money to pay them. Okay. So you don't want to put yourself into that kind of a financial situation where you owe the government a bunch of money and you have no ability to pay it. It's the last thing you want to do. Okay. So be smart, plan ahead, work with an advisor. We can all give you estimates. Any good advisor can give you an estimate of how much you need to put away, pay as an estimated tax payment to save. And also, if you're making over $50,000 a year and you're nil, likely you should convert to an S corporation and we could save you a bunch of money on payroll taxes. We can talk about more about that in a future video, but it's just some of the things you want to start to think about is how do you pay for those nil payments, okay? So anyways, those are the two things I want to touch on today for my college athletes. You know, being a native of Arizona, obviously I love Arizona State, but this video really is for all college athletes that are out there. And I encourage all of you to take heed to this. If you'd like to see me do a more detailed video or maybe a more detailed series on all the financial and tax implications of getting and receiving name, image, and likeness, feel free to leave me a comment or, you know, send me a message, and that will encourage me to go through and create something like that if that's something that you college athletes would like to see. So hopefully you got some good value out of this video. Share with all your buddies, all your friends, all your teammates. Make sure that people take heed to this stuff, and you'll all have a bright future. Okay. I'd love to see that stat change from the majority of college athletes and professional athletes ending up broke after they leave the league to the majority ended up being lifelong millionaires. Okay. That's the goal. Hopefully we can make it lifelong millionaires be the majority instead of broke and back in the workforce be the majority. Okay. So hope everybody enjoyed that. Go Sun Devils. We didn't do that great this season, but you know, hey, it is what it is. Life happens. We had some injuries from some of our key players, talking about injuries, but yeah, go Devils. And hopefully everybody enjoyed this. We'll talk to you later. Have a Merry Christmas and a Happy New Year. Peace.
This presentation is intended to be educational only and does not constitute a CPA or financial advisor-client relationship. It is always in your best interest to consult a competent legal financial advisor and/or tax professional when conducting your own personal transactions. Furthermore, it's important to do your own research when necessary to verify tax law when there's a lack of concrete guidance or gray areas of conversation.